our cash flow tripled to around $108 million, and that would have been higher had we not had some of the working capital movements, which partly will reverse in the next 6 months. Costs, whether you look at it on cash cost, which was $706 an ounce, whether you look at it on an all-in sustaining cost, which is a $911 for the 6 months, and whether you look at it on an all-in cost basis, $982, all of which improved year on year. Our margins also came through very well. Very good cost performances coming through from some of our key assets, namely Impunang, Sunrise Dam, and Serra Vingadia. We have reduced debt by about $1 billion as compared to a year ago. And in addition to that, post the quarter end, we took out the residual element of the high yield bond, saving further interest. We are conscious of the strengthening of the currencies that we are seeing across our portfolio, and where our focus therefore is to ensure that we don't rest on our laurels, but instead dig deeper into challenging status quo, putting in operational efficiencies and improvements, and getting some cost reductions across the portfolio. Hopefully you've had a chance to access the slide pack. If you look at slide number 11, it shows the improvement in terms of margins of our South African operations. In addition to that, the international operations, the margins also are pretty steady and have been so for a while and improving. But more importantly, we have highlighted on slide number 16 some of the near-term brownfields opportunities that we are working on. In terms of Siguri, we have reached an investment agreement which is subject to ratification with the government that enables us to initiate a hard rock expansion plant at Siguri. The cost is around $115 million spread over 2 years. We are also completing the final stages of our study in terms of Sadiola, which would proceed to mine the sulfide material. In addition to that, Geita underground ramp-up at Star and Comet is going well. In terms of Australia, we're seeing some positive results, both in terms of our drilling and our mine planning, and in addition to that, the execution in terms of our mining and processing in terms of Tropicana. So more to come in the latter part of the year. And Sunrise Dam has steadily been improving his mining in terms of tonnage going through the plant, and also reducing the cost in that regard. Needless to say, our South American operations are highly prospective, and that's another area of focus for us in this regard. In addition to that, looking longer term, Colombia remains the transformational opportunity for the group's portfolio. So we are going full steam ahead to complete the pre-feasibility studies. It was already done. We had to refresh it given the change in circumstances and the permitting which we received in Gramalote. We are targeting completing pre-feasibility studies for both Gramalote and La Colosso by end of next year to enable the reserve declaration to take place. Our priorities are still the same. We have kept the guidance unchanged. Our priorities remain improving SA safety, our continued engagement in terms of Abuasi with all levels within the government to get law and order back on site, the improvements being delivered in terms of Kibali, advancing further our high return brownfields projects, and getting Colombia pre-feasibility studies completed by the end of next year.
Martin Creamer from Mining Weekly Online. Venkat, fantastic results, trebling of free cash flow, cutting debt. Now gold is entering and has entered a very sweet spot. Does it require the same strategy? Do you have to continue the way you were, or do you need to tweak things now?
At the end of the day, when we launched our strategy, we said that strategy should work irrespective of the gold price, whether it's a low gold price, static gold price, or a high gold price. So as far as we are concerned, the strategy still remains in place, where we talked about preserving long-term optionality. We may bring some of it into fruition. That is the minor tweaking we are talking about. But the key here is not to be carried away by the volatility in the gold price, but remain focused and ensure that you're remaining focused when it comes to capital discipline and returns in terms of the longer term.